will go to the full extent, depending how far this goes. We will go to the extent of cutting off their energy, going down to Michigan, going down to New York State, and over to Wisconsin. I don't want this to happen, but my number one job is to protect Ontarians and Canadians as a whole. This is coming. It's not if it is, it's coming. And it's coming January 20th or 21st. And we need to be prepared. We need to stand as a country. We need to stand united as Canadians and work hand in hand, shoulder to shoulder with our colleagues across the country, and we're ready to do it.
Did you know Canada just cut off U.S. energy supply? Markets are speechless in a stunning turn of events that could reshape the global energy market. Europe is shifting its focus away from the United States, its largest natural gas supplier, and turning to Canada instead. This dramatic pivot raises critical questions. Why is the U.S., a leading energy exporter, losing such a vital customer? Has Europe found a better alternative? Or is this decision driven by geopolitics? And what does this mean for the U.S. economy? Let's dive into this unprecedented development.
Let's make no mistake about it. As I mentioned to the Prime Minister, the rest of the premiers, we need to be ready. We need to be ready to fight. This fight is coming 100% on January the 20th or January 21st. We don't know what extent this fight's going to go to, but we need to line up everything that we're going to tear up.
To the roots of this shift. Trace back to the Russia-Ukraine war, when the EU imposed sanctions on Russia. Moscow's gas supply to Europe plummeted, triggering a historic energy crisis. In the early stages, the U.S. emerged as a savior, supplying Europe with liquefied natural gas, LNG, to help the continent survive a brutal winter. However, this temporary relief came with significant challenges. U.S. gas prices were exorbitantly high, forcing European governments and businesses to pay a premium for American LNG, often far above global market rates. This financial strain was compounded by unpredictable U.S. trade policies, which made Europe question the reliability of its energy partnership with the U.S.
President Donald Trump says tariffs on auto imports could be announced very soon.
I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
It comes as Canada is preparing for two other sets of tariffs Trump has promised to impose next month. Blanket 25% tariffs on all Canadian goods imported into the U.S. are expected on March 4th.
The U.S. has long used energy exports as a tool of geopolitical influence, leveraging its economic power to shape foreign policy. However, the inconsistency in U.S. energy policy and shifting trade conditions created uncertainty for Europe. The EU began to seek a more stable and predictable energy partner, one that could provide resources without political complications. This search ultimately led them to Canada. But why Canada? What makes it a preferable alternative to the U.S.?
Trump has threatened to hit Chinese goods with a 10% tariff on top of existing levies. He campaigned on the use of tariffs to boost U.S. industries. But economists have warned that American consumers would end up paying the price.
Canada's appeal lies in its vast
resources and stable trade relations. The country boasts some of the largest reserves of oil, gas, and critical minerals in the world. Unlike the U.S., where trade policies fluctuate with each administration, Canada has maintained strong, consistent economic ties with the EU. Additionally, Canada is investing heavily in clean energy, including wind, solar, and hydroelectric power, aligning with Europe's vision of a sustainable future. This focus on long-term sustainability makes Canada an attractive partner for the EU, both in the short and long term.
For the EU,
parts are estimated to have crossed the border up to 8 times. It's not new. This plant in Windsor, Ontario has been making cars since 1928.
The trade that we have between Canada and the United States is fair trade. It's fair, free trade. We aren't the source of the angst.
I'd rather have it done in Detroit.
Well, Donald Trump says he wants the automobile industry moved back to the U.S. from Canada and Mexico.
From Canada and Mexico. But it's not just about natural gas. Canada's abundance of critical minerals like lithium, cobalt, and nickel, essential for electric vehicle (EV) battery production, positions it as a strategic ally in Europe's green energy transition. As the EU pushes for a greener future, it needs reliable sources of these materials to fuel its growing EV industry. Canada's resources and clean energy leadership make it an ideal partner for Europe, both in the short and long term. This strategic pivot could have profound implications for the U.S. economy.
Let's start with the government's response to the tariffs. Trudeau's urging people to try and buy Canadian. Is that doable, especially at places like the grocery store?
Yes, you just need to work a little harder. My guess with tariffs coming into Canada from the U.S. is that some sellers won't sell to Canada at all, so we could see fewer American products.
Its largest LNG export market, if Europe shifts its energy demands to Canada, U.S. energy companies could lose billions in annual revenue. The financial impact wouldn't stop at LNG. As Europe secures more reliable and affordable energy from Canada, it also strengthens its position in the EV industry, with Canada supplying essential raw materials for EV batteries. The U.S. risks falling behind in this rapidly growing sector. This shift could weaken the U.S.'s geopolitical influence, as energy exports have long been a key tool for exerting power on the global stage.
Tensions, tariffs, a trade war, and allegations of stealing trade secrets and technology defined China-U.S. relations in 2018. Trade tensions started simmering just 2 months into the year when U.S. President Donald Trump slapped global tariffs on solar panels and appliances.
Trade tensions started simmering just 2 months into the year when U.S. President Donald Trump slapped global tariffs on solar panels and appliances. For decades, the U.S. has used energy exports to shape foreign policy and maintain its position as a global leader. If Europe turns to Canada for its energy needs, the U.S. could lose a critical leverage point in its dealings with the EU. This could have long-term implications for U.S. diplomacy and global negotiations. The stakes are high, and the U.S. is already taking steps to assert itself. In early 2025, the U.S. imposed new tariffs on Canadian imports, including a 25% tariff on all goods and a 10% tariff on energy products. This move is seen as an attempt to curb Canada's growing influence and reassert control over energy markets.
Canadian parts suppliers own more than 150 plants in 19 U.S. states, employing 50,000 Americans. If Trump tries to push tariffs through by declaring an economic or national security emergency.
However, Canada is not backing down in response to the tariffs Prime Minister Justin Trudeau announced. Retaliatory measures including a 20 to 25% tariff on $30 billion worth of US goods. Canada is also pivoting its energy exports toward Asia, particularly China, to reduce its dependence on the US market. The expansion of the Trans Mountain Pipeline is increasing Canada's oil exports to China and Asia, reducing reliance on the US and opening new opportunities in the rapidly growing Asian energy market. While the US and Canada's energy trade is vital, tensions could have significant consequences. If Canada cuts oil exports, the U.S. could face energy shortages, higher gas prices, and increased transportation costs, especially in the Midwest, where refineries depend on Canadian crude. With China's economic rise and global supply chain dominance, this conflict also threatens environmental goals. As both countries pursue energy dominance, the environmental impact could worsen climate change. The escalating energy trade war risks a rise in fuel prices, sending shockwaves through various industries, leading to inflation, increased costs, and potential job losses. Higher energy costs could push the U.S. economy into a recession, weakening its global competitiveness. Meanwhile, Canada's shift toward Asia raises questions about balancing sustainability and market access. If tariffs are imposed, U.S. prices will increase, and jobs could be lost, impacting everything from car manufacturing to agriculture. The U.S. must decide whether to escalate tariffs or negotiate a new deal to avoid economic collapse. The outcome of this energy dispute could reshape the future of global energy markets and North America's economy. Thanks for watching.